5 years आप बोल रहे हैं, उतनी patience कहाँ है लोगों को?
I mean, but I'm saying if you don't have a mental construct to be in the markets for next 3 or 5 years, if you can't see a 20-30% drawdown, I don't know how else to make money in the market, no? So
there's no free lunch. You can't have high returns and low risk, right?
It's not possible.
Okay, but Manish, yeah.
So, Nirav, just looking at this quarter's earnings, you do some loud thinking as to what is happening, because this quarter consumption is really weak. You have the finance minister also alluding to the fact that the purchasing power of the consumer is weak. Now, go back to 2020. Okay, between 2020 and 2024, what exactly happened? Government gave out stimulus. You had a whole lot of fiscal deficit that was rolled into. What did that do? And actually, this fiscal deficit, propelled the capital markets, the real estate market. You had leveraged households piling on to consumption, discretionary, your autos, etc. That went up. You had government, spend a lot of infrastructure. Government companies did very well, so on and so forth. This is what happened between 2020 and 2024. What is happening now? The current budget says that FRBM will be followed, which means that the budget deficit or the fiscal deficit needs to come down. I think that is the pain that is getting felt. That the household leverage, which was playing out between 2020 and 2024, the household leverage is no longer available. And the government is in no mood to give largesse, like the Manregas of the world, or fertilizer subsidy or food subsidy. They are doing what they can, but you'll also have to stick to the FRB. That is the pain what we are seeing today. That corporates, they have got corporate tax cut, their profits swelled. They were supposed to do capex. That has not happened. The government has done the heavy lifting. Private capex was supposed to happen because they were making huge amounts of profits. That didn't come through. Now, you again don't expect the corporates to do, because if all this while they have not done capex, is basically again the heavy lifting has to be done by the government only. And households, you saw urban consumption not doing well. Rural was some hope. That has also was struggling over the last few years. And if you have tier 2 banks, BFSI names come out as a surprise saying that these are the provisions that need to be made in the current quarter numbers. I don't think this lasts for only one quarter. It lasts for a few quarters, right? And from that point of view, the pain in the household is clearly getting felt. So we got some fabulous returns in the last 1 year. Maybe it's the time to consolidate.
Aye.
It's the time to protect your gains rather than aim for the next 50%. If it comes through, it's a bonus. But these are the things which needs to come through, because the earnings growth is anemic.
How will you protect your gains?
Sector rotation. It is sector rotation. India has a whole lot of sectors today, 57 sectors. I have alluded to this before. The high beta, right? The capital goods, the railways, the defense, even some aspects of EMS, power, they will be vulnerable. Where do you hide? And I'm telling you, these are not selections, these are allocations. BFSI, very cheap. Pharma, defensive, Biosecure Act coming through. Technology, coming out of a low cycle into an up cycle because of rate cuts and so on. And these are index heavyweights. BFSI is, let's say, 30%, 14-15% on technology, so on and so forth. But, the problem is consumption. Anything to consumption, the government has to do something to lift the demand side of things. Demand side of things, so that autos start to do well. Housing finance starts to do well. Where are we seeing? The cement demand is so sluggish. Home improvements are not happening.
I think barring BFSI, no other sector is impressed on the upside.
Yeah, technology, a bit here and there.
It's a mixed bag, right?
But is there a difference between the buy side and the sell side?
Clearly, right? I think there's a consensus in the country, forget the studio, that from a 5-year time horizon, India is a great story.
Yeah.
You extend the time horizon, it looks even more constructive. But let's get down to what it is for the next 1 year. From 5 years, it's a buy the dip. From 1 year, is this sell the rally, consolidate, rebalance, or largely because better opportunities will happen between this somewhat and next somewhat?
So, You know, first of all, consumption. So what you are looking at consumption, I completely agree. So there are pockets of slowdown. Now look at it this way. You're looking from the lens of what you see in reported listed entities, right? Now let me turn and twist and say that, look at Blinkit. What is the GMV? 25,000 crores, right? And you got Instamart, that is another 20,000 crores. 45,000 crores of revenues has been generated in top 20 cities in the last 3 years. Right? So someone is losing out, right? Whether it's DMart or whether it's going to be Hindustan Lever, because then...
Or the Kirana stores also.
All the Kirana
So
stores.
it's coming at the cost of someone.
So I think in India, I've said this again, we don't have too much of statistical data, but I'm saying from my perspective, you know, if I look at the PMI figures, right, which is, let's say, which are non-government figures, we are talking about HSBC PMI figures, 57, 58, right?
57.7 is what
right? So we are rocking, right? If I look at very, very aggregate numbers.
This is almost a bull and bear from MK, right?
Which is great, a buy-side, sell-side difference. And that's cool.
That's exactly what we wanted.
Right, so GST numbers are rising at about in line with, you know, your nominal figures after having a buoyancy of more than 1 over the last 3 years, which is also very fine. Autos, we are seeing a slowdown, but that has to be the case. You are selling 4.5 million cars. US does about 12 million cars.
So, very pointed question. Did you buy this dip that happened last week? Yes or no?
I am fully committed today. So that is the question.
You're
Fully,
fully
100%,
invested?
100% of my net worth.
Manish, what about you?
So, you know, we have a principle generally not to keep cash because human beings
Personal
are...
portfolio, chalo, tell us that.
No, even there it's fully invested. You know, you do a rotation trade.
Yeah.
Protect your gains in the names which you have made.
And get out of that and reallocate, rebalance.
And rebalance your portfolio into defensives currently. Watch out what the regulators are going to do. Because RBI has clearly said we are not going to, alluded to the fact we are not going to cut rates before the first quarter. They need to prepone that. If you need to give some sort of an impetus on the demand side.
But Manish, I don't agree with you. A monetary policy move will only do this much for demand. If you were saying the problem is demand, I think we need a fiscal push.
Yeah, a
which
fiscal push.
we don't have the ability to do at this stage.
We do, but it's not the government's. That's not the government's policy push to dole out.
But the FRBM has been reinstated that you are going to reduce the deficit.
So it's difficult to give the push. We don't have the room to do that.
But look at what is happening on the demand side in terms of consumption.
Do you think a rate cut will push consumption? Do you think urban India will buy more?
Yeah.
But a current account deficit increase or a fiscal deficit increase will do the trick.
Okay, guess who's joining the argumentative Indians on the table?
Where
Krishna
is he
Kumar Karwa,
sitting?
let him be the judge out here. But I just want to mark, just before we get to Mr. Karwa, pre-open rates have settled down and it's a very flat start that we have for ourselves. Banks may be slightly higher, but aside of that, we don't see too much out there. In fact, even the mid caps and the small caps, at least on open on the face of it, seem to be just around meandering along. So specific stocks which might on results might do well, but be that not. And by the way, Spandana Spurti is starting off really lower.
But terrible numbers, 40% lower, and every parameter.
I think it's all about the numbers. Look at Gillette, fantastic. Federal Bank, Suzlon, Kalpataru. So even Tamil Nadu, Mercantile Bank. So where the numbers are good, the street is definitely rewarding.
For now. But Mr. Karwa, good having you as well. MK Think Tank here. We have a difference between the buy side and the sell side here. Not really a difference, but kind of maybe
time
a cautious
horizons are
move.
different.
Yeah, time horizons, but cautious view versus a slightly constructive view. Where are you here? This somewhat. Are you a buyer? Are you a cautious buyer?
Yeah, I'm an eternal optimist.
So you're a Nirav camp, huh? Good, you're sitting
I'm
also
an
in the
eternal optimist. First of all, thank you for inviting and happy Dhanteras and happy Diwali to all the viewers. So I think, as you said, the last cue, that time horizon, I think that is what is important. And maybe you are careful, cautious in the short term because of whatever extraordinary returns that investors have seen on the markets in the last 2-3 years. So mean reversion is this thing. And yes, valuations. So if I remember a few months ago in August, I was on this same
on
platform.
the conference time.
And I was careful or cautious about the valuations. And it is playing out in many stocks. So coming back to short term, yes, you could be muted returns. But the basic story remains as strong as it ever was about the domestic economy or the opportunities, etc., etc. So valuations you have to always be very careful about. This time around in the short term, maybe what we were seeing a huge amount of liquidity which was there, but now it is getting absorbed, A, by the various IPOs, etc., and B, by the massive FPI selling. So short term, yes, you could have issues or rather muted returns. Earnings are not supportive. I think that is something which is a cause for concern. But from a longer term perspective, we are always bullish, and there is no reason not to be bullish upon.
On the IPOs, since you mentioned the IPOs, NTPC Green now we know will come. Everyone's talking about Swiggy. You've had a sort of a mixed bag on the response for the IPOs recently. Have you also tempered your view towards the primary markets? More, I think, time to be more selective?
See, I think even corporates are very smart. Yes, some corporates have overpriced themselves, and we are possibly seeing the impact of that in the listing and post-listing of one of the larger IPOs. But what I believe is that one of the other IPOs, which is expected to come in the next few weeks, they have reduced their valuations also.
Swiggy.
So they are leaving money on the table for investors. And that's the right thing to do, that if you have decided to go public and you're all there, then looking at the sentiment, it's very important that you temper the valuations and you leave money on the table, because at the end of the day, it's about if investors don't make money, then it's not a very fair way of going about it. So my sense is corporates are equally smart, as much as you can say the retail investors who were very smart in the recent auto IPO.
Yeah, most certainly. Okay, now just stay on, gentlemen. We'll continue our conversation with just 2 minutes left. Rajat Bose, one quick word from you. You've seen the pre-open rates. Is there something that you would want to trade? What would be your top trade this morning?
See, as I said that HCL Tech had the best of momentum. So HCL Tech could be traded, as well as IRCTC. Those two I have chosen. And among the current this pre-open rates, I would say that as I see, not much. I would say that maybe you can look at LTTS, which is up by 14.50, currently ruling at 5164. If it manages to get past 5175, then 5209 would be the next target. Caveat has it that I personally hold some shares in that stock. Apart from that, even Apollo Hospital, again, I have to give the same disclosure that I personally hold some shares there. Here, you put a stop loss below 69.40, and if it manages to get past, say, 69.85, then 2,000 levels would also be bridged.
Got it. Okay. Rajat, Sunny, both of you, thank you so much for taking the time out and being with us today. And to you and yours, happy Dhanteras. But the market's kick-starting trade this morning and looks like a flattish start. So no big moves except for specific stocks on which there would be either result-led moves or otherwise. So here's the screen. And the Bank Nifty's about 1/3% higher. So that's spurting higher. I wonder what's correcting. Let's just quickly bring the mid-cap and the small-cap indices. I would reckon they would be starting off flattish. Maybe crude sensitives are higher, so watch out for them. Mid-cap's about 1/4%, small-cap's about 1/4% as well. Get the heat map up on the screen, Nifty 50, and just see what's moving. So you have some gains for NTPC. ICICI Bank continuing from where it left off yesterday. So up 1%. Now you know why the Bank Nifty is active. Reddy's, Bharat Electronics on that Morgan Stanley note, Grasim, Apollo Hospitals are amongst the gainers. From the losers, Infy's correcting, down about 1.5%. Yesterday's top mover, Shriram Finance, is down. M&M corrects after yesterday's up move. Reliance is flattish to marginally lower. And Kotak Bank and some of the metal names are pulling back. So that's the long and short of it. Nothing too dramatic on the index. NTPC is the big mover on the upside, and Infy is the big drag.
NTPC, I suppose, because of the shareholder quota sort of excitement on NTPC Green, though it's already run up on that a fair bit. On the broader markets, let's just quickly pull up what the broader markets are doing, and not half bad. I mean, even Stevens really completely flat on the mid cap and the small cap index as well. Nothing great happening there either, but very, very focused on results and the reaction to how the numbers have been. So look at Gillette, for example, the big winner this morning, 11% up. Sirma SGS, second good day. Again, numbers impact. A Federal Bank, JSW Infra, Kalpataru, and the list goes on. So IGL actually switched around from the pre-open session, but IGL also reacting to numbers. On the downside, though, you have fair bit of pressure coming in terms of profit booking. And I just want to pull up and see what's happening to Vodafone this morning, since Vodafone was one of the winners yesterday. Yeah, you're seeing some pressure in Vodafone as well. So largely, I would say numbers related moves a bit muted, and the red deepening on the Nifty IT. So IT stocks also taking a bit of a tumble. I think BFSI also not holding up compared to yesterday, but Nifty IT hit sharper.
Yeah.
Maybe bond deals are changing the mood there.
It's a quiet day of trade. I don't think we should be getting too excited or too disappointed. It comes in after a pretty sharp up move, but what's important is follow-up buying that we need to see in today's trade. Manish, you were talking about sector rotation and defensive. Now, for an investor, this becomes a little bit of a difficult journey, right? But because you talked about defensive, and defensive in the true nature of its sense is companies in the consumption pack, for example, sectors such as pharma, sectors such as IT. Now, consumption has been the biggest disappointment this quarter, right? So how do you define defensive? And also in that same breath, when we talk about rebalancing, I think the idea is take profits off the table in the broader market funds and rebalance it to the large cap space. Do you agree with me on that too? So sectorally and market cap wise.
So everything is relative in today's context. You are trying to relatively outperform what the market is going to do.
Yeah.
So where is the earnings comfort? It's basically in BFSI. Even this quarter, the best performance has been
only BFSI.
There. Yeah, the large cap BFSI, and even the PSU banks are doing relatively much better in terms of earnings. IT has been a decent quarter. Okay, you expected double-digit growth, but it has come in at single-digit growth on a broad basis. And obviously, you're coming out of a rate cut. The cycle, the low cycle again is. Pharma again is going to not disappoint in terms of numbers. But, so there is where you actually go all out in terms of protecting your relative outperformance. Again, one more sector.
You buy.
Yeah, you buy.
Front. Okay.
Or you sell something.
Yeah.
And one more sector which has really done well this quarter is your capital market entity.
Of course, yeah.
And these sectors have not seen a re-rating in terms of multiples. And this is here to stay.
But if the markets turn volatile, sentiment takes a little bit of a dip over the next year or two, you will see those companies get impacted. Because I know while the income is sticky for most, but the minute we start seeing advisory income easing off, because once you're concerned, and you're concerned, right? And then things just don't work out for you. Capital market performance is a function of what the markets have done.
No, basically it's basically a sector getting re-rated based on what the medium-term outlook on that sector is.
Beyond this 1 year.
So it's not about the markets going up and down. It's basically what are you platformizing in terms of your entity. So, you have exchanges, a duopoly, RTAs, which are duopolies. You have depositories, which are duopolies. You have broking platforms, which is now non-linear because everything is tech-enabled. Of course, markets will go up and down. You will have the SEBI regulations come through and so on and so forth. But the number of demat accounts, the number of online trading accounts today are minuscule compared to what the number of PAN accounts are today. The number of PAN accounts are more like 50 crores and above. We have just 5-6 crores of trading accounts. I mean, that's going to change. Maybe this is one, and fantabulous ROEs on these companies, more than 20, 30. How can you have these companies trading at 20p, 25p? I mean, you've got to think slightly long term.
Before we go to Nirav, then let's ask the businessman here, right? He's running a financial services firm in the capital markets link space. We've tried to think about this and ask people, what is the kind of earnings curve or trajectory that you foresee? I'm not asking you to get prediction in your business, but what's the kind of turn that you foresee over the next 3-5 years?
I think all of us need to, what Manish said was exactly on the ball. That the mindset of investors for this part of the business was that it is a very cyclical business, deep cyclical, and the impact on profitability used to be very high. The operating leverage used to be very high. But now the sheer size of the business itself, the whole opportunity has become so big. And also the business has got concentrated with limited entities. So the impact of any dip in volume or volatility will not be so high as it used to be earlier. All capital market entities, if you look at the brokerages, the wealth management firms, the asset management firms, many of them are all housed under one entity. So the businesses have become much more stable. The revenue streams have become much more stable. So I think the valuation multiples will expand. It's a question of time before investors realize that this is a sector which is growing very fast. And as far as your question is concerned about the growth, my sense is that anywhere between a 20 to 25% kind of growth in revenues for these kind of businesses for the next 5 years don't count me on every year, but on a broader CAGR basis is a given. It's just a given. The businesses have become very, very robust. Regulators have also ensured that the businesses are very safe. So the certainty of earnings for all entities in this ecosystem is very, very high.
So the kind of squeeze on F&O volumes, and we'll see that in a graded way, not a dampener to sentiment?
I think these are things which will take a quarter and two and get adjusted.
Okay.
That is what it is. We have seen so many regulations over the last 25 years.
You see volumes moving then? Because
there will be some impact if people will get used to the new way of business, etc. Or you have only one weekly expiry kind of a thing coming in, all those things. Those adjustments will happen. But those adjustments will, within a quarter or two, you will see that it's all history. Because if people want to trade, they will want to trade. Now, whether you give them a weekly...
Unless you open a casino.
No, I don't think so. That casino, and I think it's a very, very unfair argument to compare broking
gambling versus trading.
Casinos. Yeah. I think it's a very unfair argument. So I would not get into that kind of a thing. My sense is that, people want to trade, people believe that they can make money. And there are success stories, and yes, there are data which is saying that 90% of the people don't make money. But I think there's a reason behind that.
Right.
If you don't do your homework, who is to be blamed?
Yourself.
Absolutely.
Yeah.
So that is what
Nirav, why don't you come in on this, right? We've talked about, you seem like you're an eternal bull, which is great, and that's what you want to hear on a day like today, right? Tell me, we've talked about BFSI extensively. Earnings have been good, but we also understand with financialization of assets and capital market players picking up, this is going to come at the cost of banks. Asset quality is a concern, but still this is a relative outperformers compared to the others. Manish alluded to there being 57 sectors. Give us ideas, give us spaces where you feel like there is value, earnings have impressed, where the growth potentially could be non-linear. So stocks or sectors that one can buy and actually keep buying over the course of every decline and hold for the next 3 to 4 years.
Well, I'll just add. So, just wanted to add to what KK said. When you look at something like capital market advisories now, and you talk about the impact of the option volumes and all. So now, if you look at 5, 10, 15, 20-year volume CAGR, volumes, right? That is about 13%. 20 years back, your commissions are about 2%. Today, I'm working at a yield of 7 bips, right? So I cannot have any more pull down on my revenue growth because of any further compression in yields, right? Likewise, for his business, I'm assuming that you are at 2%. Now I think you're charging at about 50 bips or 60 bips, right? And we are talking about scale. I mean, please understand and appreciate that in a country like India with 1.4 billion and with savings about 200 billion, $300 billion, it's a massive market, right? At some other time in 30, 40 years will be larger than what US is around. So this is going to be a massive opportunity. Think of it. How many guys are there in this space? How many foreign guys have come in and said that, you want to tap the savings pool in a country as large as India, right? So these are phenomenal opportunities, and it is exactly like Indigo, right? People are somewhat worried about the fact that you're looking at quarter on quarter. You completely understand, don't appreciate the fact that, there is massive ROE, right? Yeah. And you see what has happened. And, you got some big supply getting absorbed in those kind of sectors. So, let me add, again, so look at something like renewables. For all of us, we've all been grounded looking at Warren Buffett and looking at these success stories, and it's very easy for us to get very, very value conscious, which I completely understand and appreciate. But big opportunities are also made when you can price the growth, right? Today, for example, and we met n number of promoters are putting in billions of dollars in something like renewables. It is an all-in bet on on government regulations. Right, the fact that you've got an X level of custom duty support, anti-dumping duty support, and look at the numbers, for whether it is going to be premier energies or stuff like that. And this is not something that you can think is going to happen for next 2 or 3 years, right? You have to assume that, renewable is a 5, 10, 15, 20 year story.
What's your favorite in that space?
Well, I'll not get into stock specific because I'm not accurate. I'm just giving you a macro perspective, right? So I'm saying there is a second level of detailing that you need to do.
Yeah.
All I'm saying, something like Dixon, for example, right? Look at the blowout numbers. Right, you are growing at 80-90%. Now, obviously, it is not very easy for you to say that I'm willing to buy something at 80p. But just because you want a great story cheap, you're not going to get it cheap, is the point I'm trying to make.
So, okay, great stories are going to come at a cost. I just want to now narrow focus to say a week from now. Manish, I'll come to you on this. November's looking very exciting. Many things happening. You have, the election in the US. You will have the next Fed meet. A whole host of events which will come in. Do you see the mood changing dramatically one way or the other first week of November? Brace for impact, good or bad?
Look, I think the FIs are in no mood to stop selling India.
To stop selling India?
Yeah.
Okay,
they are
that's
in no
important.
mood, whether you call it a China rebalancing or whatever. They are in no mood to sell India, no mood to stop selling India. The key thing to watch out for is the SIP flows that are going to be there before everybody in the first week of November. If you have a support coming in out there, and in that also the composition, whether mid caps, small caps are getting a larger share of allocation as opposed to the large caps, you jolly well believe that India will get support at decline. But given the fact that we have seen a 7-8% cut on the Nifty and the mid and small caps would have fallen more, has the retail investor got shaken?
Yes.
If that happens, the back of the market will crack.
So SIP wale par bharosa hai.
Ekdam. That is the lifeline for India because everything else is today on the negative side. You'll have, let's say, geopolitical issues. You have a China again coming out with a stimulus announcement on 3rd November or 4th November, something like that. You have a president election in the US. You know who is going to be favorable to India or not favorable to India.
Are you sure? I mean,
No, I'm not sure about anything.
Who's favorable? I mean, Trump is really. I can't tell.
Yeah, you don't know, but
Very close.
Yeah, it's quite close. But you'll have policy impact. Either of them gets so that is one. So I think it's all about the flows, and you see what the government has to do, given the state of affairs currently, given that we are looking at a stressed household sector, that needs to be taken care of. Sure. Yeah, you need to have good announcements as far as spending is concerned. The real economy. Today, everybody is focused on the financial side of the economy. One has to really focus on the real side of the economy.
And it's tough right now. I mean, and the anticipation is that the next 1 year off camera, everyone tells you that the next 1 year is looking tough, even when you're running a business,
again,
right?
Just reiterating the fact that it's advisable to really protect the gains that you have made in the last 1 year.
Yeah.
Rather than aim for the next 50%,
Just one quick, sorry, you want to go first?
Please,
I just want to quickly get some perspective. This year belonged to the PSU pack. Everything from defensive to railways to fertilizers enjoyed their rally, and we justified it with order wins, government, election. Do you feel like for the foreseeable future, while these are the pillars of India's growth story, may not be able to generate significant wealth for the next couple of years?
No, I think you can't generalize the PSUs. There are PSUs which are extremely, cheap and would have very decent growth. In the case of PSU banks, I mean, they would be trading at half the valuations of private sector banks in general. And, the numbers seem to be better than the private sector banks, at least this quarter.
Yeah.
So that's one. Monopolistic companies, oil marketing companies, 5-6% dividend yield stocks. I mean, what are we saying?
Yeah. In fact, that was going to be my question. So I have two more questions. That's very quickly we'll make it. Nirav had written a wrote, oily moily. I remember that conversation very well. I'm just thinking, Nirav, oil, such a big positive, 4-5 big instances of either geopolitical stress or otherwise, it refuses to budge and go above 80 in most cases, right? How big a positive is that? While we're talking about all the negatives.
That is as good as, monetary stimulation.
Yeah.
There is no doubt about it.
Right.
And which was coming to that, which is why I am not a great believer of trying to take very short-term tactical calls, because you may focus on earnings and suddenly you'll have big earning boost because oil is going down, which is not in your control. Or you'll have to preempt the policies, right? For example, I see no reason why the government should not be, RBI should not be cutting the rates now, right? This is unheard that, you got Fed cutting the rates and you got the audacity, which is very good. That tells me the strength of the Indian economy, that you said that I'm going to hold my own fortress. And see how rupee has behaved, right? Despite the fact that my DXY rallied 4% in month of October.
You have the invisible hand in the currency markets, right? So it's going to behave.
100%, but you should have very good to buy.
You talk about crude, and I know Neeraj.
I have a question with Mr. Karwa.
I just want to do a follow-up on this. What about other raw material costs? Commodity prices are on a general uptick. So while crude is capped, margins for most companies are impacted because of imported inflation.
But as a nation, crude price is lower is great news.
And gold higher is an offset in my opinion.
They have to pass it on. Excise duties have to be cut on the pump. If the pump prices have to get lower. So
that is very likely now. I think that's very likely, because I think now you got a trajectory. Last part of that risk is out. You are assuming that now, at least from what it looks like, Israel-Iran seems to be settled.
We just want to break one story and then we come up for wrap-up comments. So allow us to do that. Important one coming in from our banking editor Vishwanath Nair. It's an NDTV Profit exclusive. Sources are telling us Prem Vatsa, Emirates NBD are likely in final race for IDBI Bank. Vishy joins us with more details. Yes, Vishy.
Right, Tamana. So we did report a little while ago about in July, if I'm a little later. So initially try to turn around IDBI Bank until later. So initially try to turn around IDBI Bank under the special structure and then eventually merge the two banks that he controls. Emirates MBD, of course, they will have to create an Indian subsidiary to ensure that the purchase happens through that entity and that IDBI Bank remains an Indian-owned bank, even though the owner of the Emirates NBD remains a foreign player. These are important moves primarily because what we understand from sources, what Shrimi Chaudhary, my colleague, had reported a few weeks ago, where she said that the government is looking to close this entire process in the next few months. Hopefully by March, the government is expecting financial bids. In the coming few weeks, these bidders will be allowed entry into the data room where they can do due diligence into IDBI Bank and then formulate their bids for the bank. That entire process is being set in motion. That's why it's important to know who exactly is in the race. And it seems it's Prem Vatsa as well as Emirates NBD who are fighting it out for IDBI Bank.
Sorry, on IDBI Bank, let's just pull up the intraday as well. So IDBI in focus. In fact, the BFSI pack in focus. And an interesting point here from Manish Sonthalia also said BFSI is looking exciting.
Just because it's very cheap. And if you want to have growth of 6%, the credit growth in the system needs to pick up. Today, that credit growth is missing because the household is leveraged.
Yeah, fair point. Okay, so then because it's Samvat to Samvat, right? Very quickly, before we wrap up, the big calls. Now, Mr. Karwa, I'll start off with you. 2 years ago, on this very platform, in the digital avatar, you told us that look at the capital market space. It may not work for the first 3 months, 6 months, but it's worked like a charm. Would love to understand from you, maybe for the next Samvat or maybe for the next 3 Samvats, what is your cornerstone call as a theme?
See, I think it is very important that one is the growth aspect and the second is the valuations. And today I believe that I think investing in banks probably is the best thing to do because valuations are very, very reasonable.
Private or PSU?
Private banks now.
Okay.
PSUs are
frontline private banks?
Frontline private banks. I think that is the space to be in. They have gone through a lot of consolidation. They have underperformed the markets over the last 3-4 years. I think, and you have to anticipate what regulatory positives can come further. For the last 12 to 18 months, the regulatory tightening has already happened. I think, and they were right also. But my sense is now that the regulators will ease things off for the banking system because if they don't do that, if credit growth is not there, our economy will not move forward the way we want it to move. So I would imagine that the regulators will also, so I am anticipating, I am hoping that there will be an easing of regulatory tightening which has happened in the whole system in the last 12 to 18 months and that should give a big fillip and plus valuations are in my favor from a next 2-year perspective. Because all the actual hard economies, I mean, whether it's defense or capital goods and all that, all those parts of the economy have played out.
Old economy.
in terms of valuations. So I know the future, it's all in the price. But here there is an opportunity for me to, for the next 12 to 18 months, 24 months, I think that should be my bigger call. And again, I'm only focusing on the domestic economy. I'm not looking at what's going to happen globally, etc.
So we've got banks, we've got capital markets. By the time we come to you, the list, the options that you can choose are going to be lesser. Nirav, barring these two sectors, your top sector to bet?
I'll just add one more, which is fintech. Super bullish on fintech.
Okay.
I'll also be very bullish on the utilities chain, right? So anything like in coal, transformers,
Little more detail would be useful, huh, Nirav? This macro theme is great, but no one's going to do all this
So I'm
homework.
saying, I'm just telling you that
Pay me for it.
your demand is
Free
increasing.
mein itna hi milega.
Of course, yeah, your demand is growing at 7-8%. You can't set up the capacities in the same rate, right? So this is a fight and your story, and not many people want to invest in it, which is what I like, right? And I like industrials, right? But I'll create a long tail. So
it won't be core. It will be a little bit of your
absolutely. I'm cognizant of the valuations, but then I'll still play that.
But I think what he added on fintech probably...
Fintech, but that PP Fintech is one of those stocks that you would probably... So on those lines, is that what you're thinking?
Anything can get listed. All I'm saying is that that part, that's a new thing, right? So I believe that in next 5 years, you can have a mega tech which can come out of that.
What about counters like, I know it's again a duopoly in some ways, Zomato, Swiggy. Is that a space QSR looks good
expensive,
to you?
but yeah, love it. So I think that the quick commerce space is made for India because you don't have organized retail in the country, and the cost of delivery is so cheap, right? So guys coming on a cycle and guys coming on a scooty and some stuff like that. So $200 and your delivery is free. So I'm a consumer and I can sense it. So and I give the numbers, right? We're talking about GMVs of 25,000 crores in 2 years, demarked to 20 years to reach a turn of 50,000 crores.
And Zomato. Manish, what about you? You can't pick any of those.
So I think you can't miss out on pharmaceuticals. That has been a great performer. And with the Biosecure Act coming through, as soon as the president of US gets elected, he will put a stamp and signature on that Biosecure Act and it becomes a law. You'll have a plethora of opportunities.
He or she?
I mean, that is for... Okay, he or she. So, yeah. So,
You have to probably check they, whatever they say.
Yeah. So, I think, India's tap is going to open as far as the CDMO opportunity, the generic, biologic.
Yes.
And you name it. A whole lot of companies out here would actually, this sector should do quite well.
Janan, thank you so much to you and yours.
Thank you so much.
Happy Dhanteras, happy Diwali.
Thank you very much.
Appreciate it.
Happy Diwali to all.
Lovely to talking to you. Okay, on to more conversations. This is